Ego is a customer-centric approach to build how do you call it, a B2C marketplace, because people are reluctant in sharing their personal data with corporates, and corporates need personal data to make better products and services. And we try to establish such a market. We will be I call it the left or the right arm, I don't know, a digital arm of an individual. So we are completely customer centric. We are just the digital extension of the ego. We provide the ego this possibility to securely exchange his data, the data he wants, and control his data. We're not controlling it, the individual does it.
At its heart, it's a simulation API. So what can it simulate? It can look at the wider economy as well as individual behaviors and help combine those two to give deeper insights on clients and help drive better conversations with those clients. So just to take an example, it can feed discovery data, churn through thousands of scenarios applying a variety of products, say insurance products, banking products, for example, to find the best product for that individual on a client-by-client basis, which means that you can free up your time crunching those numbers to help drive sales and engagement on a person-by-person level for that financial institution.
For doing such a market, you need blockchain such that for the KYC process, that the individual is known when he enters into such a marketplace. And that's what the blockchain does in the background, providing a digital identity to the customer. The person does not even realize that we're using blockchain technology in the background. It's when you sign on, it takes a millisecond. And what you get from blockchain is your digital identity. The rest is not blockchain anymore. So no personal data is on the blockchain. We're just using blockchain technology for the KYC, for the know your customer process, such that you can digitally sign wherever you are on. You're known.
We found that a lot of financial institutions, be it advisors, banks, or insurance companies, were spending a lot of time crunching those numbers, going from person to person, and this was just eating up a lot of their valuable time actually discussing the recommendations with their customers, discussing the advice with their customers, and discussing the advice with their customers. And as a result, we have the technology, the simulation technology in the background to be able to overcome these technical difficulties. We're an actuarial company at heart, so we've got a few decades of actuarial experience in our background that we can now bring to the fore with the revolution in digital technology. Well, that's actually a great question, because some companies are definitely of that opinion. So you might know about the robo-advice revolution that's happening at the moment, which is very much all digital end-to-end customer experiences. But other companies and large financial institutions still believe in the value of the human advisor. So we don't see it necessarily in the first instance as supplanting them, completely removing them from the equation, but we see it as enabling them further to help free up the time that they have to focus on the high value sale, which, as I said, is having that valuable discussion on the recommendation and on the advice. The GBA platform started in Australia, and in Australia, financial advice as a commodity is huge because of the amount of money that people have in their superannuation funds. And it's been a huge problem recently where there was advice being missold and bad advice given to people. And this has come out of what's called the Royal Commission in Australia, which was an investigation into that type of behaviour. So we see a gap for helping to regiment this sort of advice. It's an area that is kind of ripe for revolution at the moment.